Hey guys, what's up? This is Andrew for TRENDLINES.com. So for those who are watching my video for the first time, let me quickly introduce myself. I used to work as a professional trader. I have just resigned, guys, for you to be here to make everyday updates on GameStop, AMC, or anything you want me to make an update on. I'm also going to be able to do live trading with you soon. So you're going to see how I actually do my trades on a live market. I'm also going to start to do more trading for myself because I need, to make some money as well, as I have no more jobs for now. So I'm going to show you guys everything. I'm probably going to take some positions on my favorite stocks as well, which I was not allowed to do. So this is a new start for me. This is a new adventure that I'm starting right now with you guys. And today I want to make a huge update on AMC. Let's get into it. So AMC, what do we have? We have a lot of things today. So as usual, I'm going to go step by step. Let me first remind you what I told you guys in my previous video. So in my previous video, there was not anything like this. We were like this. In my previous video, I have different scenarios. I had one scenario like this, all right? Like we go right away to the fifth wave, or another scenario that was actually making a correction a bit longer. So I was going to 35, because I was telling you we might have a flat correction. But here, like right now, we're having more information. And once again, corrective patterns, it can be a zigzag, a flat, or a triangle. I get all this information from here, guys. I'm going to bring you through this. So this is the ELLIOTT Wave course that this is the online book. You just type ELLIOTT Wave Theory on Google and you can find this right away in the first links. So I read this book, I did a summary of it on the link in the description of this video. So just click on it, guys. You're gonna be really amazed. I try to make it easy to understand, and I think it's very good information for you. Even if you're new to the theory, you're gonna understand, the psychological mechanisms that are behind each waves, why the wave counting is actually working in any type of market where you have enough liquidity, and how to basically use this information to set up your trades. So I'm also building a comprehensive course, guys, that is going to be amazing, where I basically give you step by step all the methods that I like to use. I'm going to explain exactly how to do it, guys. It's going to be for beginners, for advanced traders as well. I'm going to put everything, I'm going to put my heart in building this course. So this is as well the reason why I resigned. I want to, share the knowledge that I have, that I've been using these methods for many years. And some of them, they're working very, very well for me. So I want to show you guys exactly how I do this. So once again, let me remind you here what is happening, guys. So since this breakout here, you guys are with me. For those who are watching my videos, you know that I'm calling these levels for a long time. We went to 35 like I expected long time ago. And this third wave was actually even higher than this. So I did an update after we corrected to 26. And I told you guys that this impulse is so strong that we're probably going to go to 75 right away before correcting. And this is what happened. So let me just remind you guys what techniques I use here. So I measured the third wave and I applied it to the bottom of my fourth wave here. And this is how I find the 75 level. All right. So here, so depending exactly, if you do it on the hourly or 4 hours time frame, it's an area between 65 and 75. So right now it's giving me 72. But once again, guys, fibs are not trend lines, all right? It gives you approximative levels. It gives you areas where you usually have some resistance or support reactions. And here it's the reason why I choose 72 in this example is because it's the 1.618, guys, the golden number. You can find this number everywhere, guys, in finance. And if you know how to use this ratio, you're going to see that it's both interesting to use it to enter some trades by using fib retracements, but it's also very, very good to use to find targets, especially in this kind of markets that just go higher and higher. So here, once again, I'm going to go back to ELLIOTT very soon, but first let me show you how I find my new target. I measured the third wave. I applied to the bottom of the fourth wave. So for now, the bottom is here and it gives me 137. So this is my level. I think we're going to go there in the fifth wave. We're having a fourth wave, but what is it, guys? You need to ask yourself, what is the correction you're having? Because once you know what type of correction you have, you know when it's going to be finished. So here, guys, look, just connect the highs and the lows. And you can see that here, guys, we're having a nice triangle. So when you spot a triangle, you need to wonder like which position it is happening and it's here in the false wave, then you go to the Elliott wave course, or you click on the link in the description of this video and it's going to be the same thing. So here you have the explanation of what are triangles, lesson 8 triangles. And what is very interesting that I wanted to show you guys is this. Although upon extremely rare occasions in a second wave, in an impulse appears to take the form of a triangle, triangles nearly always occur in positions prior to the final actionary wave in the pattern of one larger degree. Id as wave 4 in an impulse, wave B in an ABC, or the final wave X in a double or triple zigzag or combinations. So we are here in this situation as wave 4 in an impulse. All right. So this is what we're having. We're having here 1, 2, 3, 4. This is my triangle. So I know it's a force. I know it's a triangle. I know there's going to be a fifth wave. And this is how technical analysis is working. So once again, I might be wrong here. Every time, I might be wrong, but I'm very confident in this scenario. Now we can go back on the 4 hours time frame. And here you can see as well, guys, that, you need to find some support and resistance levels. So this triangle can also become suddenly like this. It's still going to be a triangle. So this is the reason why I told you at the beginning, we might go back to 35, but maybe not. Maybe not. Look here, we're having this on the 4 hours time frame. We're having the 50 period moving average that is acting as support. So it has not been touched. Maybe it's going to be touched or maybe not. So if you're wondering what is the next move to make, if I was trading this market, which I'm not for now, but I'm going to be very soon, guys, I'm going to be allowed to do it. But I need some time just to, properly finish my contract. So for now, I'm not allowed to trade AMC. But if I was, I would be a buyer, of course, around the 35, 37 area. I would be a buyer around the 40 area because I have here the 50 period moving average coming. And if it's not coming to me, then it's fine, because you know what is going to happen after the triangle? Guys, it's always the same thing. So here it's an example, all right, of a triangle, but you can see breakout, retest, we go higher 90% of the time. So it's going to look like this here. So I don't know. Let's count the number of waves we're having here. Let's count. Usually triangles have 5 waves. So this is giving me another information about when this correction is going to finish. All right. Zigzag and flat have both 3 waves. Triangles have 5 waves, guys. So 1, 2, 3, 4, 5. All right. So let me make it like a bit theoretically perfect. So this is not the triangle I'm having. My triangle is here, guys. All right. So here we might already be done, guys. We might already be done. Maybe this is a 1. We're going to have a 2, 3, 4, 5. All right. So this is one scenario. All right. So as usual, guys, now I'm giving you my scenario. So actually the 1 is going to go here. The 2 is going to go here. All right. So this is one scenario. Let's call it my preferred scenario. I think, it's very likely it happens like this. Another scenario that you might have is this one. The triangle breaks here. Usually they have 5 waves, but look here, we have a 9 wave triangle. It can happen, guys. You just have one wave that is extended inside this 5 waves. So maybe we're going to have A, B, maybe this is just a C, and then we're going to have D and E. This is possible as well. So, it's not because we go lower here and go to 35 that it's bad news. It's good news, guys. All right. If 35 breaks, then it's a bit bad news. But once again, there is an alternative scenario that goes here. All right. It's possible as well. And then we could do, a kind of zigzag flat, this is on the table as well. So I don't know exactly what is happening for now, but I know that all this area is a buying area. All right. So I wouldn't buy here. Definitely not. And here you can see we are on the hourly time frame. We broke the 20 period moving average that was supporting the price here. We broke it, we retested it. Once, rejected, second time. So here, I'm definitely not a buyer. But if the price action goes like here, breaks it on the 4 hours time frame, then retest, then I'm going to feel very good. Then it means that this scenario is playing out. Let me show you guys again this scenario. All right. This is my preferred scenario, guys. And for those who are watching my videos for some time, you know that my preferred scenario is usually the good one. So I think we're going to do something like this. But once again, I have 1, 2, or 3 alternative scenarios that go back as low as 25. This is the most bearish scenario I have. Once again, because, fourth wave, they like to retrace either to the top of the third wave, so 35, or the bottom of the fourth wave, 3 or 4. So in both cases, guys, we are bullish. So all my scenarios for now lead to 135. Everything can happen, so you just need to stay, focused and aware that anything can happen. And right now, guys, I want to go with you through the financial data. All right, guys, so let me start with the most interesting data that you guys probably having already, but I'm sorry I didn't update you guys more often this week. As I told you, I was busy with the handover of my resignation, but here I was waiting for the 28th of May data that was released, I think 3 or 4 days ago. And you can see, guys, the short interest, the short interest is up, guys. The total short share is 102 million, up from 95 million 2 weeks before. So it's very interesting to see that the shorts are not covering despite these very high levels. Actually, you want to know what is happening? Shorts are covering and they are creating this strong moves up. But there are new short investors that are coming in the game that are like, hey, AMC is at 50. It's too high. Let's sell this. All right, go sell it. You're going to see, it's people who unfortunately don't know enough about technical analysis, I think. So we're going to find out what is going to happen, but there are going to be some more shorts coming if we go to this higher levels. And once these shorts are large enough, we can have a short squeeze. So the short interest is at 21%. So it's increasing. Now, let me show you what we're having on the option market, guys. So I keep here all the information that I get on Yahoo Finance of all the maturities, all the listed strikes. So I go to the 145 strike and I go to the Gen 23 maturity, all right? I take all of them. I compute the delta myself using Black-Scholes formula that is here, guys. For those who are interested to do it yourself, I put the formula here. So it's N of D1. D1 is equal to a logarithm of S divided by K. S is the spot, K is the strike, plus volatility to the square times T. So volatility must be in year here, divided by volatility times square root of time in year. All right. So then you are able to get your delta. That is a probability we finish in the money. Once again, this is why this data is very interesting to look at, because it means, for example, if I take the 145 strike for the June maturity, all right, the delta is only 4%, guys. The delta is only 4%, but I think that the probability we finish there is higher. You can see that the number of 145 call options is growing, guys. Go check my previous video. It was around here. Now we are here, guys. We were at 3 million shares. We are now at 8 million shares, guys. So this is good. This is what is creating this bullish momentum on the upside. So I want to see these options growing, and they are. This is good. This is telling me that the gamma squeeze can happen again. We're having right now a total synthetic short exposure of 19% on the option market compared to GameStop, for example, where we're only at 10%. It's much higher because those options, most of them, they are in the money. We just went through all the big strikes. We went through the 40 strikes. This is why we had this very strong moves up. And once again, we're having the expiry, guys. When is it? 18th of June. And look the number of options we're having here, guys. We're having on the June maturity 700,000 options, guys. So for example, on the 8 million shares we're having on the 145 strike, most of it comes to the June maturity. So this is extremely bullish, guys. I like to see this kind of bullish momentum here. And the volatility, yeah, let's have a look at the volatility, guys. So I keep the big strikes volatility. So here is the 40 strike, here is the 70 strike, and here is the 145 strike, guys. And we're having volatilities for the June maturity 338%, guys. So very, very big volatility because market makers need protection for this event if this event happens. And let's check the delta of the, for example, September maturity, guys, for the 145 strike. Look, guys, the delta is 55%. 55% chance AMC trades above 145 in September, guys. So, guys, this is very bullish. Everybody is bullish here. Everybody gets in the AMC trade. We're going to see some more moves up. We are finishing this 5 waves development after the triangle finishes. So this is what you guys can use as a signal to enter a trade, for example, to trade this 5th wave. So I gave you here, guys, I think very interesting information. So I hope you enjoyed it. And if you did, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.